how to take profits at a 100x, at a 50x, at a 20x, at a 10x, and above and beyond. In other words, how to sell at the top so you don't sell too soon, and also to not give your profits back to the market. Yes, I know some of you wish you sold 3 weeks ago when the market was at a high and this retracement. Well, I'm going to show you the top tricks to read the markets like a pro so you can sell at the top and not give those profits, hard-earned profits, back to the market. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to focus on only currencies, but now exclusive on cryptocurrency. So let's dive straight in. I'm going to use an example of Fantom because I did a video on Fantom in, when was it? October 9th, 2021. It was actually a deep dive into technical analysis. And we said, look, the market looks like it's done a wave 1, a wave 2, and we're coming up towards this wave 3 high. We want to be very high alert on this wave 3 high because after a wave 3 comes a wave 4. So this pink box with this line, we even gave a date, right? We'll look at this in more depth in a second. On the next bearish reversal on this date, we expect a high to be near. We should anticipate profit taking. How and why was I so confident on this was because of basic human psychology. When people have made a certain amount of profits, they're gonna want to sell and take those profits, realize those profits. So you want to be on the winning side, the winning team, because you're playing against millions of players, right? You want to buy low and sell high. So let's have a look at what typically happens in theory first. Let's look at the theory. So typically markets move in a 5-wave sequence, 1, 2, 3, 4, 5. 50, 60, 70% of the time, they're going to be very identifiable. And we call that a wave 1. And then markets move in an ABC structure, a wave 2. And then typically a wave 3, which tends to be the strongest, biggest, most impulsive wave, especially in stocks. But in commodities, but I've also found in crypto, often it's wave 5s that can be the most impulsive. But that's a wave 3. And this is what we were anticipating as the high. And then afterwards, we should anticipate an ABC wave 4 correction. By the way, if you're very new to Elliott Wave and Fibonacci and never seen this kind of stuff before, I've actually created a free Elliott Wave and Fibonacci masterclass. It's in the link below. I've broken this down into layman's term, which will give you an edge on reading the market so you can sell at the top, maximizing your profits, but also how to buy at the bottom because you want to be buying at the lowest possible price. So what happened? Look at this. Look at this. So this is what we projected in advance at this date in November. And look, the wave 3 high was made just above there. And look at this correction. So now what I want to do to kind of get this across, because I'm realizing that people are not getting the power of Elliott Wave and Fibonacci. And 90%, 95% of people are totally unaware that what drives the market is human emotion, fear and greed. Fear of missing out, fear, uncertainty and doubt, optimism and pessimism, euphoria and depression, right? That's constantly driving the markets on a short-term, medium-term, and a long-term basis, right? You can do this on a minute-by-minute, and it will show. You do it on an hourly chart, and it will show daily, monthly, and even yearly. This psychological pattern just occurs over and over and over again. And if you're aware of this pattern, you can maximize your profits. So you can see when this is happening. So you are not giving the profits back to the market down here, right? Because a lot of people give profits back to the market because they have no idea on when should you be selling. Well, we put this video up on October 9th. October 9th, it's like 3-4 months ago. Or 3 months ago. And it said, look, this is the high probability area. It just spiked above there, and then we got a correction. So now let's look at the theory and just draw it over. So look at this. So this was the theory. We said wave 1, right? So this is the wave 1. Yeah. So you can see, obviously, you have to have a bit more practice because obviously this is the theory, straight lines, and this is, the real life. And then we're looking at this wave 2. So if we look at the theory, A, B, C, so you can see that there's a wave 2. This is typical patterns that occur. And there's Fibonacci ratios that occur where there's particular ranges and zones and time zones. And then what we get is a wave 3. And we drew this out. Look at this. 1, 2, 3, 4, 5 in this zone. And look at this. 1, 2, 3, 4, 5 in this zone. So this is the theory over the practical. What did we anticipate? What did I anticipate next? Was a wave 4 correction. A, B, C is the typical. But look how clean that is. A, B, C on a wave 4. Bang. So what we're going to do next is we're going to jump into a live chart of Fantom. I'm using Fantom as the example because I think it's a great one. I've taken the date back to where we were, because now what I want to do is I want to just clean this chart up. Look at this. This was great. This, by the way, this time analysis, what we did, just so you're clear, this is most people don't know this. I've never met anyone apart from our mentors, which I paid a lot of money to learn this stuff over a decade. We measure how long did it take for this wave 1 to form, and then we project it forward from this wave 2 low, and that's typically the minimum area zone for a wave 3. So we had time projections, price projections, momentum projections, and pattern projections telling us that this zone here was going to be a top, likely to be a top, and then it just panned out. So this is the zone that we want to be taking profits. We might not get right at the top, but we can get close to the top of taking profits, so we can really maximize the entire wave. Even though we're using Fantom today, this applies to Bitcoin, it applies to cross swap, applies to Astro swap, it applies to the micro caps, the medium caps, Uniswap, Pancake swap, the Binance token, the BNB token, etc., Cardano. All of these, some are going to be cleaner than others, but this sequence of psychology just tends to pan out time and time again. So when there's fear, maximum fear, that often is sometimes the best time to buy. So I'm just going to clean this chart up. I'm going to just get rid of all these lines. Yeah, so we can keep it clean. The wave 3 is now confirmed, so we can get rid of the question mark. We don't need this time analysis no more. So now we got a nice clean pattern. So now what we're going to say is this date at the bottom over here, this date over here, I've taken it back to where we did the video, is now December. Sorry, the video we did, it was over here. This is December 13th, right? So we're a month back, and we're just going to do some analysis so you can start to see these patterns, so you can start reading the markets like a pro. So when you are 20x up, and you might be thinking, I think it's going to go 40x, right? So I'm not going to sell. But if this pattern occurs, then that's probably going to be the wrong decision. But also, if you're 20x up and the market is only in this range, and you go, okay, my analysis shows that we should get to this range, then it makes more sense to say, I'm going to take some profits and then let the rest of it ride. So we want to have logical, mechanical, non-emotional decision-making skills. It needs to be objective as much as possible, because human emotions are not great when it comes to investing, right? Fear and greed, if that's driving you, you've already lost. Whereas if we can mitigate that, get a written plan down, a business plan, then you're on a different ball game. So now what we're going to say is, if we say this down here, is what we're looking at as a wave 4, right? Very clean in the sense of, look at this. It's a nice A, B, C of a wave 4. It doesn't get much cleaner than that. What we could also do, I'm going to do this, I'm going to do it quite fast, because my last Fantom video, I realized was like 50, 60 minutes, I got carried away, is there's a couple of Elliott wave rules. One is that wave 4 should not trade into the range of wave 1, right? So that's really, really important to understand. Also, a wave 4 correction would normally go into the range of the previous wave 4 correction, which is, here's the low of the previous wave 4. This is a bit more advanced, but I'm going to cover it to you because you see this time and time again. It's in this zone. And then I'm just going to get rid of this as well. It's just more for reference. Then there's a few key ratios, right? Because you want to know this, because if you're looking to buy also, we want to buy at the bottom of a wave 4 and sell at the top of a wave 5, right? So we want to see these patterns and the psychological patterns. Now, by the way, I don't know much about Fantom, right? We can jump into the website, we can look at the fundamentals, the tokenomics, we can look at the roadmap and everything else. But this, what I'm covering with you today, is purely 110% technicals. I'm just looking at market psychology, human psychology playing out, right? Human psychology, very, very important to understand. But yeah, but what about the news? What about, it's all baked in. It's all baked in. We can ignore the news, ignore everything. We're just looking at 100% technicals. And I know that that's difficult for many, but that's just the name of the game. So typical wave 4s is 38, 52, and a maximum of 61%. So you can see it's hit this maximum of 61%. So we can get rid of these two. This is a typical maximum wave 4 zone. So we've actually, what we just done there, just very quickly, I covered this in more depth in the masterclass, which is in the link below. We measure this top and pull back 62%. That's what this green line represents, right? That's what, just so we're on the same page. And then what we're going to do is we're going to narrow it down more. That's a macro indicator. We measured the wave 3. Now what we're going to do very quickly is measure this ABC. ABC, A and the C. We go, what you get? First leg of the correction, and this leg of the correction, second leg to the downside, often equal each other, right? So what we're going to do, we've got some tools over here. Again, I'll break down the tools more in the masterclass and some of my other courses, but I'm going to do it relatively fast here so we can just get to the main numbers. Look at that. Look at that. This particular ratio is 100% of wave A projected from the top of wave B is what this red line is. And there's a cluster there. So now we've got practically really strong indication that the market is going to reverse at wave 4, high probability. But no, it's high probability, never certainties. And you'll see that I've got a question mark over the 4. Why have I got a question mark? Well, it's to remind myself that this is a highly probable wave 4 low zone, but anything can happen, right? So we've got to have proper risk management, because if you fall into the trap of saying it's going to happen, then you've already also lost, because you're going to overexpose yourself. You're going to put too much in. Even if it pans out, sometimes that can be the worst thing, because in the future it might not. So now what we're going to do as an entry strategy, because some of you I know are trading, is you can enter on a swing high. So you can go, when the price goes above this swing high or this swing high, I want to go long, which means buy. So that's what we're going to do here. Bang. And then let's just see what happens. Bang. That will be our entry point. We've got a momentum indicator. Let's use, I'm just doing this quite fast today. This one's a bit better, the 13. Okay, we've got entered, it's overbought, but that's fine. If you're using a stop loss, and if you don't know what a stop loss is, don't worry about it, because most people that are buying tokens are not using stop losses, because the DEXs, decentralized exchanges like PancakeSwap, don't have that feature right now. This is where your stop loss would be. But now what we're doing is in advance, and this is where we're going to finish the video, is, okay, what's our analysis? Where are we anticipating the market will go? Well, after a wave 4 comes a wave 5, right? And typically, I think I got it here. Yeah, typically a wave 5 looks like this. Let me just get this one. I got a few of these examples. Here we go. This is the one I want to show you. Typically a wave 5 looks like this. 1, 2, 3, 4, 5. Most common wave 5s, if I can just draw on here, exceed the previous wave 3 high, right? Often a wave 5 is the same length as a wave 1. So this wave and this wave are often the same. And also if we measure wave 1 to wave 3 high, wave 5s are typically 61.8% to 100% of that. And that's what we're going to measure now. And what we're going to end up with, we're going to end up with a zone like this that tells us that this is going to be the typical price zone of a wave 5. Doesn't mean it's guaranteed, it's just highly probable. And then the length of time it took for a wave 1 to form, the length of time that we're talking about time, is often the length of time it takes a wave 5 to form. Yeah, very, very important. And then we can also do a few other things, but we're going to keep it relatively simple today, even though we went quite high level at the same time. Simple, simple, simple. Simplicity is the ultimate sophistication. That's what Leonardo da Vinci says. So let's just now look at this. Again, remember this date down here. I've taken it back to December just so we can do this, because what we're doing with Fibonacci and Elliott wave is leading indicators. We're looking into the future of what's likely to occur, because once the date is unfolded, you can't go back in time and make the money. You have to make the decision today on what's likely to occur tomorrow, right? Hopefully that makes sense. Tomorrow, the next week, the next month. And then you can maximize your 20x's, your 50x's, your 100x's, your 1000x's, especially if you get into IDOs. You got to also remember there's initial spikes, then there's corrections, then there's the next leg, wave 3, correction, and then, but most people don't give it the time to mature, to kind of unfold, let the seed, spread its roots, and let the psychology just take its path. And many projects will just follow this textbook style. So now let's just get some wave 5 price projections first. So let's now just clean this up. All right, let's just say we're happy with this. Now the wave 4 hasn't really been, like, the big confirmer for the wave 4 is going to be really exceeding this high and then eventually this high. But when you're buying and you're trying to maximize your profits, you're trying to get in at the lowest possible point with high probability, and you just got to do proper risk management. So now let's just keep focused on a wave 5. So what we're going to focus on today is a wave 5 price zone where you should be taking profits, but we're also going to talk about becoming risk-free, because even if there is a high probability time and price zone, it doesn't mean you should wait to that peak to take profits, you might want to move in 3 phases. Phase 1 is get your money back in your pocket, money off the table, risk-free, which is if you invested 10,000, get 10,000 back in your pocket at a profit. And then your conservative target, and then the aggressive target, and you're going to let that market run because that's where you make the big money. But at the same time, you don't want to just wait for the high target because then it's too much risk. All right, let's go. Let's see if we can get this done. So we're going to measure wave 1 to wave 3, as we said. We're going to project it from this wave 4 low. And the two ratios that we want is 62% and 100%. All right, you'll see a red line up here. Bang. All right, great. So that's our first broad zone, right? So we got that information. Great. Next up, we're going to do is measure wave 1. Again, I covered this in my courses in the masterclass in more depth, so I know I'm doing it quite fast. But it's more, the lesson here is that we can project in advance the high probability zones. So the peak of wave 5 will tend to be 1.618 of wave 1. So you can see it actually falls below. So we just need to be aware of that because this wave 4 was quite a deep wave 4. It was, 62%, which is quite extreme for a wave 4, but it is what it is. All right, so now we've got this zone. And then what we're going to do is something called an external retracement, where we're going to measure this down here, but it's going to do external retracement, which means it's going to take the measurements up. We don't need to worry about the complicatedness of this. We can just literally click. I'll show you how to do this in some of my courses. Click. And the two ratios that we want is 1.272 and 1.618. So now we've got these two broad zones, but it gives us vital information. We don't need to do anything else in that context. What we're also going to do now is we're just going to do 2 time projections. One is going to be, we're going to measure how long it took this to do this wave 1, and we'll project it forward for this wave 5. We can also do the same because what the key ratios are is 62% as the minimum, 100%. And if it goes beyond the 100% time, then it will tend to be 1.618. But we'll just keep this range just so we get an indication. And then we'll do the same for this wave 3. We'll measure how long it took this wave 3 to form, project it forward, and you can see it's almost identical. So we don't need to have that one there. It's pretty much identical, which is great. There's some other advanced things you can do, but we won't go into that today. What we've got now is 2 broad zones. One, I'm going to keep it quite broad, which is this low to this high over here. Now, we have to take the caveat of we might get something called a 5th wave failure, where, and it can occur, and it does occur, where the 5th wave doesn't exceed. It's not that common, doesn't exceed the wave 3. We want to be aware of that. That can happen. And then the other zone is up here. Now, I'm a big fan of micro caps and low caps because I think you make much more gains, but you do have a bit more volatility and a bit more risk. I like to get risk-free. And there's a couple of ways of doing this. One is we're going to see if we're wrong and this is not the wave 4 low, what's the minimum that we should achieve? Is actually this wave C, this here. If we measure this and we take the 50%, again, this is more trading skills, trading thinking, is if the market hits here, if it's possible for you to be risk-free, like a 1x or a 2x or a 3x, that would be great to do, just so you're going to protect yourself. So if the market does end up going to a deeper correction, something that we're not anticipating, which is always possible because we can only do probabilities, never certainties, then you are protected. Your money's back in your pocket and you're still in a profit anyway, so it doesn't matter. And you can be focused on other opportunities. But if it only goes here or continues to the upside, we'll make maximum profits. So now let's just wrap up and unfold this market to today's data, and then we'll just do a update on today. Today's focus, as in the example, is Fantom, but this applies to everything. Everything. That's the lesson, right? Whether it's the micro caps, like, we're looking at Wagyu swap, we're looking at Astro swap, we're looking at we did CKB, Novus network. I know that's a more micro, a bigger cap, etc. But look at this. Now the market, it's just beautiful, right? This is what you call an overbalance of price. What you get? What you going on about? This movement to the upside is bigger than any previous move to the upside in this sequence of a correction. So this is a really clear indicator that there's a trend reversal. We've also smashed these little swing highs, and also this swing high, and then this is the major swing high of a wave B that we want to exceed as well. So that's important information. So we can be quite confident now that it's likely that this is now going to be a wave 4. But we were picking the bottom. That's important to note. We were picking the bottom, right? I know I've taken this example in hindsight, but you see a lot of my videos where we do it in foresight, right? But sometimes it's not comfortable because of the news, and I just ignore the news, right? Like the news, most people are 2 steps behind the market, and the news is lagging information. And often it can be true that when there's most fear, that's the best time to be buying because of this. This is where there's most fear, but is also just psychological human behavior that buying is likely to occur. And when there's more buying, which is more demand, then it drives the price up. So now let's just take it to today's data. Bang. This is where today's data is now. This is where we are, right? So what does this look like to you, right? So what we're going to do is we're going to jump into a weekly chart first. We're going to go to the top left. Let's just look at where the weekly momentum is. I like momentum indicators. It gives us some important, valuable information. What it shows us is that we've had this bullish reversal. This also coincided this low. Look at this. I cover this in my courses, these momentum indicators. This is called a stochastics RSI. This low where the blue line crossed over the red, married up almost perfectly. In fact, let's just do it like this. Can I do it like this? Let's have a look. I'm sure it'll give me, yes, we can do it like this. Look at this. Can I do this? Yeah, perfect. Look at this. Let me move it. No. Hold on. Let me do that again. Let me do it a bit more accurately. All right, here we go. Bang. Pretty much. It's bang on, right? Look at that. Right? And this is the power of some of these objective pieces of information. The weekly momentum's done a bullish reversal, and it's coincided with the low, with pattern, with price, and time. There's 4 pieces of information. That's what you call a confluence of events, and we want to leverage that information. Very, very valuable. All right, so now what do we have? Taking it to today's data. Again, this is the same for Shiba Inu, for Dogecoin, for, again, Cardano, for, we can go to the top 100 cryptocurrencies, and we're looking for these patterns for best buying opportunities. But today's focus is profit taking. Sell at the top. And don't fall for the traps. There's lots of traps out there, psychological traps, where people think the market's going to go up forever. So now what we know is that this weekly momentum is overbought, the blue and the red, or the blue line's over this black line, which says we should be reaching towards the top of our momentum. The red line is also approaching that zone. So we now want to be aware that we're coming towards potentially a top, at least for a few weeks. And then when we go to the daily chart again, I would say on the next bearish reversal, when the market goes up, hopefully you can see this. Let me do it like this. When the blue line and the red line come up here, and when the blue line crosses below the red, it will probably coincide with what's likely to be in the range of a wave 5. So this is where you need to make a business decision, right? So now what we're going to do is let's just make a few judgments. So when I'm looking at this, what I'm thinking to myself is, do you see any pattern from a 5 wave to the upside? Well, what I see, and you probably see the same thing, if you think about it, is this looks like a wave 1 of a wave 5. It looks like a wave 2 of a wave 5. It looks like a wave 3 of a wave 5, or 4 of a wave 5 in an ABC sequence. And this looks like a potential wave 5 of a wave 5. And this potentially is the beginning of a larger degree correction, right? We don't know the information yet, but we can only go with what we have. So is it possible and plausible that we have got what we said as one of those outcomes, a 5th wave failure? You go, remind me again, Jigir, 5th wave failure. I remember you saying that. Well, that just means when the previous wave 3 high is not exceeded by the wave 5 itself. It's a 5th wave. It fails to exceed the wave 5 or the previous high of the wave 3. And then the correction begins. Keeping in mind also that this wave 3 was overextended. It was 2.618 was around here, and it overextended, which means there's, it tends to lose momentum. So that's one of the key things that we want to be aware of. So right now, I would want to be risk-free. If I bought down here, I go, okay, it's not looking great in the short term. But there's two potential outcomes that I see happening. One is if this high doesn't get exceeded and we just start beginning a larger degree correction, or there's another one. And I'm going to lean on this other one because there's a particular reason. One, the main reason is that we have not reached the minimum typical time for a wave 5. Remember, we measured the wave 1, we measured the wave 3, and this was the minimum typical time of a wave 5 zone, and we haven't entered that zone. So I think what's going to happen is this. I would want to take profits. I would want to exit this because of the weekly momentum in this zone. Yeah, I want to get the highest probable, and there's a few ways of doing it. One of them is on a swing low or on a 1 bar low. Let me show you the 1 bar low, and then I'm going to finish up how long I've been talking for. Sometimes I get into this detailed technical analysis, and I get carried away. But my last Fantom one was over an hour, so I'm going to try and keep this one a bit more sharpish. So let's just do a simple exit strategy for you. Let's just say we believe in this particular scenario, weekly momentum we know in the top left-hand corner is overbought, and the daily momentum is over the next 3, 4, 5 days, we'll probably get overbought as well. Is what I would like to do is just now exit on a 1 bar low. Go, what does that mean? What does it mean? All right, we're using candlesticks because it's easier to see the 1 bar. If you're using a stop loss, if not a stop loss, you can use a price alert on Coin Market Cap or CoinGecko. It says at the low of the previous day's bar, if the price goes below it, I want to sell. So we go, okay, this is now the 1 bar low here. If the market moves up like this, I want to then move my stop loss here. And then if the market then does a reversal and then goes down here, bam, I sell, right? At least risk-free. And then what we're going to finish up on today is the second scenario. If this is not the end of a wave 5 high, what's likely to occur? This is what I'm going to cover with you now, and then we're going to wrap it up. Let's go back to our line chart. Line chart I like because it's closing data and it just makes it easier for you to see. Right, so what we're going to look at here is a potential. This is what I'm seeing that I think is more likely to occur. We'll see. Again, as we get a bit more information, the next wave will tell us, because if this high over here gets exceeded, then we have to reevaluate. Yeah, so what I think is going to happen is this. There's two scenarios. Either this is the wave 5, so we're going to do it like this. Let me draw it like this. Here we go. This is important because it just gives you that edge. Most people don't have that edge. They're just really just hoping and praying, and that's just not good enough, right? So this is one scenario. This is the wave 5 high. All right, time to get out. But the other one is that I'm going to go back into the weekly. I'm doing it like this and then taking my time as well because, this is important information. And most people don't know this. And if you do know this, then you have an edge in itself. Is that it might be sideways to down for a few weeks. Then we get a reversal, but it might pan out this way. Because sometimes wave 5 is the extended wave, right? Wave 5 is the extended wave. That's definitely true in commodities because it's more seasonal and it's driven by fear. People fear of missing out, fear of missing the contracts, fear of, if people are buying gold, they're fearing that the price of the dollar or something else is going to go down, so they need to get more gold to protect themselves. Let me now draw it like this. This is a wave 1, a wave 2, where we might get a wave 3, 4, and then a 5. Something like this. And then this might be the scenario. Might be a little less aggressive, like something like this. I'm just speculating here. Might end up being something more like this. Right? We don't know that information, but what we do know is we know that we've created this nice wave 4, textbook style. ABC. We projected that nicely. We projected this wave 3 high in advance. Now we're either going to have a fifth wave failure or we're going to have a movement to the upside. Now, what we want to be aware of is the weekly momentum is overbought. So now's the time to go, look, we probably might get this wave 2. And as that unfolds, then we can reevaluate. But because we've had this nice 5-wave sequence to the upside, we're probably going to get, whether this ends up being a wave 2 or the beginning of a bearish market for Fantom, we don't know. So I personally don't want to be in this position right now. I would want to exit. And because let's just say we held for this point here, we go, let's exit at the maximum point. If this gets exceeded, then we have to reevaluate. But if it doesn't and it moves more to the downside, then it'll be looking for another entry point towards what might be a potential wave 2 low. But on the same note, if this low down here eventually gets exceeded before this occurs, then we have to reevaluate also. So hopefully you found that helpful. Let me know how you found that. Like, subscribe, hit the bell notification. I love the fact that the channel is growing. We're getting some amazing feedback. I'll do my best to reply to every single one of your comments. But today was all about how to maximize your profits, because what's most common, it was shown with the 2017 bull market, around, I think it was 80 to 90% of people that made a lot of profits gave it all back to the market as we went into 2018 and beyond. Yeah, and people sold near the bottom, and it's really typical. Remembering that this is a zero-sum game, there's winners and there's losers. Your job is to get the edge in your favor and be on the winning side, right? We want to be on the winning side. It just is what it is, the game that we're playing. So if you like today's content, like, subscribe, hit the bell notification. If you want to learn Elliott wave and Fibonacci, take my free masterclass. I cover it in a lot of depth. And then I got some courses. If you buy one of my courses, you get invited to my private Telegram. We do Saturday workshops. I'm going to be looking to do more and more workshops, because I realize right now we're probably going to move into the last 20% of the bull market. I'm anticipating another leg with Bitcoin and the whole markets. But again, we need as much information, the powerful information that's going to help us sell near the top. All right. You stay well. Oh, no, we finish on a quote. I nearly forgot my quote. When I was in Dubai, I didn't have my book. So now we got my book. Here we go. Confucius. It does not matter how slowly you go as long as you do not stop. It does not matter how slowly you go as long as you do not stop. Confucius. Now, that's important today. That's really important today. Why? Because, you're not going to learn Elliott with Fibonacci overnight, right? Yeah, but you can get the basics and the understanding, and then it's all about keep going. One step at a time, 1% at a time. It's something called the Kaizen way. It's a Japanese philosophy where you just improve 1% at a time. But if you do 1% for 70 days straight, you're going to double the outcome, double your knowledge. And it was also shown with the flow. There's a nice scientific studies that showed you can measure happiness. And measuring happiness was also said, if you're in the flow, in the zone, in unconscious, your unconscious is so engaged in what you're doing, you don't realize you're so engaged. You're paying so much attention, you don't realize you're paying that much attention. And that's the secret to happiness. But also measuring it scientifically and mathematically, if you can find where your level's at, I know some of it's like, learning Elliott with Fibonacci is like a whole big topic. If you can go 1 to 4% above your level, that was shown to be the key engagement level where you'll start paying attention. If the information, or you're trying to do something that's above 4%, like 10% above your level, 50% above your level, is too stressful, and people give up, right? It's too much anxiety. And if it's below your level, so your level's here, and we want to go 1 to 4% above, but if it's below your level, it starts to get boring. If it's really below your level, it gets incredibly boring, and then you give up. So the art and the science of learning is actually finding the 1 to 4% zone that's going to allow you to keep going. But when it's effortless and you're in the flow and it brings you happiness, then all of a sudden you're going to want to be in that happiness zone, because it releases endorphins, you feel phenomenal, and it's like meditation. It's like meditation in action. So your job is to meditate on Elliott wave and Fibonacci, learn the basics, take the masterclass, learn 1, 2, 3, 4, 5 ABC. 1, 2, 3, 4, 5 ABC. Can you spot it in your crypto portfolio? Where is it? 1, 2, 3, 4, 5 ABC. But don't worry if it doesn't make sense straight away, because everything is difficult before it is easy. Your job is to just stay in the 1 to 4% zone. When you improve, You just up the level 1 to 4%. And then there'll be times where the penny drops and you go, now that makes sense. Yeah, I thought it made sense, but it didn't. But now I get it. Oh, I see the way 1, 2, 3, 4, 5. Oh, okay. But now I can break down. There's waves within the waves. Okay, that's another level up. Oh, now let me add Fibonacci ratios. 50% retracements. Oh, that's the common, wave two zone. Okay, does that break down to an ABC? Okay, it does or it doesn't. Oh, these are the Elliott wave rules. Okay, that's invalidating the rule. I need to reevaluate. Wave three cannot be the shortest wave out of wave one, three, and five. Okay, that doesn't make sense. Then you do it 50 times and you go, oh, now it makes sense because that looks like the shortest wave. So you're going to get this knowledge. It's natural, it's learning. So everything is difficult before it is easy. And I encourage you, I challenge you to take the free Elliott Wave and Fibonacci masterclass because it's going to allow you to see what others don't see. It's the invisible. Human psychology is what we want to see. People get too caught up in the fundamentals of a project, which are important, but they line up. Because I can look at Fantom and I can look at 50 other cryptocurrencies that I've never even heard of before. At a glance, I can go, it's likely that people are going to start buying. Based on what, Jagir? I go, based on fear and greed, based on human psychology, based on human behavior. But Jagir, you don't even know what the token is. Yeah, I traded currencies like that for like over a decade, right? People will give me a ticker symbol and I would look at the currency. I go, I ain't got a clue what's happening in Mexico right now, but the Mexican peso versus the Canadian dollar, it's got this chart pattern, bam, entry. All right, the Japanese yen versus the Canadian dollar or the Australian dollar, I ain't got a clue what's happening in those countries, but the technicals are the technicals. And I was a pure technical trader. When it came to cryptocurrency, I found it applies even better than the forex markets and better than the stock markets. And I think it's because the psychology is more raw. The projects are younger. So that's beautiful for us. But you have to do the training because it's not going to make sense overnight. Hopefully that makes sense. All right, I'm going to finish up. You have a great day. I'll see you hopefully in one of my live workshops. See you soon.